the big day approaches, India's individual taxpayers are eagerly awaiting potential relief measures, with the interim budget of 2024 offering little in terms of tax benefits. There are high expectations for substantial reforms this time around. And our next report explores the key changes that could significantly impact the middle class. Take a look.
In anticipation of Budget 2024, individual taxpayers are hopeful for significant relief. The government is expected to reduce the highest tax rate under the new tax regime from 30% to 25%. Additionally, the standard deduction may increase from the current $600, providing further respite to taxpayers. There are also discussions about raising the income tax exemption limit from 3 lakh rupees to 5 lakh rupees, potentially benefiting those under the new tax regime. Personal finance experts suggest that the government may increase the Section 80C deduction limit from 1.5 lakh rupees to 2 lakh rupees, a change long overdue since 2014. This adjustment could help taxpayers combat inflation and boost savings. Moreover, the threshold for the highest tax rate under the old tax regime might rise, offering further relief to the middle class. These changes aim to address the shortcomings of the new tax regime introduced in Budget 2023, which did not attract the anticipated number of taxpayers. Other key expectations from Budget 2024 include raising the long-term capital gains exemption ceiling and increasing house rent allowance exemptions to offset rising rental costs. These reforms are crucial for enhancing affordability for those living in rental accommodations. With the first full-fledged budget of Modi 3.0, taxpayers are looking forward to substantial tax reforms that will boost savings, stimulate investments, and provide much-needed relief to the middle class. Business Bureau, WION World is One.
All right, for more on this, we're now being joined by D.S. Saxena, former Principal Chief Commissioner of Income Tax, live from Ahmedabad. Thank you so much for joining us on World Business Watch.
Thank you.
Now, what do you think about the tax structure and what tax reforms, in fact, are needed to boost consumption?
I'll take you through a bit of history. The Indian tax system was conceptualized in the late 50s and early 60s by Nicholas Caldor, a very famous Hungarian-British economist. He advised no less than 8 countries on tax policies. He envisaged a holistic tax system for India. So we had Income Tax Act, Wealth Tax Act, Gift Tax Act, and Estate Duty. But over the years, only Income Tax Act remains. All the other acts have been repealed. And for income tax also, it has been amended beyond recognition. So there is a need to look holistically at our taxation system. Coming to the Income Tax Act, you can see that it has become quite iniquitous. There has been significant inflation in the last decade, but the minimum amount liable to tax has not gone up. So it is pinching the small taxpayers very much. And now there are 2 tax regimes. One tax regime is known as the old regime and another as the new regime. It unnecessarily confuses many small taxpayers who have to go for professional help, which adds to their compliance cost. So what I can suggest is that we should have only one regime, either the old regime or the new regime, so that people are not confused and move from one regime to the other. The next is that there are many small businesses. There are individuals who have proprietorships, and then there are small firms, your kirana store, pan parlor, and all. Now, what is iniquitous is that companies which are manufacturing companies have only pay only tax at the rate of 15%, and other companies pay tax at the rate of 22%. But firm and individual, a firm, if it has 1 rupee income, it has to pay 30% income tax. And for individual also, after 12 lakhs in the old and 15 lakhs in the new, you have to pay 30% of tax.
Right.
So it is inequitous, uh, because the small guy has to pay more. Then coming to the indirect tax regime, GST has got a number of slabs. Now, most of the countries which have GST have only one slab, and some countries have two, but only 4 or 5 countries in the world have 5 slabs of GST. And then we have VAT on petroleum products and alcohol. So all these lead to, uh, you must have read about GST evasion rackets and all this complexity leads to uh, all kinds of wrongdoing. So uh, we have to have a very uh, uh, a simpler system of taxation.
Right.
Now, if the government wants to boost, just 1 minute, if the government wants to boost consumption, it has to have give more disposable income to the small guys. Because suppose there's a small taxpayer, if he saves, if you give him 10,000 rupees, he's likely to spend those 10,000 rupees. But if you give a person who is already rich 10,000 rupees, he is already spending whatever he has to spend. So mostly that amount will end up in his bank account. So giving tax relief to smaller taxpayers should be the aim of this budget.
Right. So, in fact, I was just going to come to this. That's where things stand at the moment. I want to understand if you're expecting any sort of tax reforms in the upcoming budget. And if yes, how do you think it will impact the various sectors?
Uh, I'll be very frank to you. I have seen many budgets, and all the budgets raise great expectations. People expect that it will be a giveaway, but it is not a giveaway, because the government has to balance its books, and there are too many people who want deductions and exemptions and tax relief and all. So in the end, mostly the government gives some very small tax relief. So if you ask me realistically, I don't expect much relief in the budget. There can be some relief, like you have said that the standard deduction may go up from 50,000 to 1 lakh. 80C deduction on PPF, insurance, etc., may go up from 1.5 lakhs to 2 lakhs. But uh, to have an impact, there should be some major relief, like uh, we have effectively 5 lakhs is the minimum amount of income which is taxable. So if we increase it to 10 lakhs, there will be fewer taxpayers. There might not tax collection may not dip, because if you see the trend of tax collection, there are around 10,000 big taxpayers who pay 80% of tax. So it won't impact tax collection, but it will put more money in the hands of small taxpayers.
All right, sir. That being said, what are your views on tax incentives for innovation?
Sadly, uh, the tax relief on innovation has gone down over the years. Till the year 2018, whatever you spent on innovation, you could claim a deduction of twice that amount. But from 2019, it came down to 2018 or 19, it came down to 150%, and currently it has come down to 100%. But even this is difficult to claim, because under the new tax regime, if you want a lower rate of tax, you should not claim any deductions or incentives. So, effectively speaking, innovation uh, is not a very, what do you call it, tax saving activity at the moment.
All right, Mr. Saxena, thank you so much for joining us on World Business Watch with your insights on this.
Thank you.
For latest news, download the WION app and subscribe to our YouTube channel.